Welcome to the first podcast of the HUFF. The HUFF being the Hull and Humber Financial Forum, for those who aren't in the know, and welcome to my bar, the Pear Tree Inn, as you can see from the side there. So today we wanted to just give the viewers a little bit more insight into the HUFF and what we do, and expand on that, and also introduce you as one of the members. So just to give the viewers a bit of an insight that the Financial Forum is here to help SMEs in the Hull and Humber region, and we're really sort of focused on finance for obvious reasons. Now, within the group there is an IFA, there is an accountant, there's a grant specialist, there's a mortgage specialist, there's a recruitment specialist, there's Invoice Finance, and there's property development finance as well involved. So really we're here to help SMEs try and achieve their goals, and we are basically the oil in their machines, as I should say. So we're here to help and provide some advice, and really that's what we're here trying to achieve. So Gareth Fawke of inksmoor, welcome. Take it away, tell us a little bit about yourself.
Thanks for having me, Rob. Really appreciate it, and thanks for being the first one as well. I don't know whether that's a good thing or not. But I'm sure we'll find out on this call. So as Rob said, I'm Gareth Fawke. I'm from inksmoor. We are specialists in invoice finance and secured business lending. So that's very short and snappy, but I think it does the trick.
Absolutely. Well, just to make it a bit more fun, Gareth, tell the viewers how we first met each other.
Excellent, and this is something that is such a good story. This being from in and around Hull and Beverley all my life, and I'm working nationally with finance brokers, sort of doing a little bit of research on people in the local area, and Rob popped up from Kingston Capital Finance. I thought, I don't know Rob, I'll just cold call him, just give him a bell, introduce. Look, I'm on your doorstep. Not many. In fact, I don't think there is any actually invoice financiers based in Hull other than inksmoor. And at the time, that's all we were doing was invoice finance before we added the property security. So picked up the phone, introduced myself to Rob. I'm on your doorstep. Let's grab a coffee. And Rob turned around and said, "Yeah, we've got loads of invoice financiers on our panel, and I don't really need another one." I was like, oh right. So, well, that was as salespeople you get used to a no and go again. So I thought, well, okay, fair enough. He'd said that Rob, you said that you were an asset financier and did a lot in IT, and my business partner Andrew had come across a deal in IT asset finance. So I thought, timing's everything. So I picked up the phone to Rob and said, "I know you don't want to speak to me. I know you've got so many invoice financiers on your panel, but have a look at this lead." And then it went from there, really, didn't it, Rob?
It certainly did. Yeah, I do feel a bit embarrassed now when you tell that story, and you have regaled that story quite a few times, to be fair.
And this will not be the last time either, as we've become probably friends as well as business colleagues. I will be telling everybody I can physically tell.
It's interesting because as business owners, we always get cold called, don't we? And of course, part of our job is cold calling as well. Yeah. And I think that particular day, I'd received probably about 4 or 5 cold calls in one day. And I thought, what's going on? There's so many cold calls. And you happened to be the one that day. And I picked up the phone. I don't normally pick up the phone either. I let my colleagues do all that. And I just thought, I better pick it up. It's ringing. And then you cold call. I was like, oh my God, not another one. You called me on the wrong day. But fair play to you. You persevered, and I appreciate the IT opportunity. Which nothing ever happened, by the way.
No, of course it didn't, mate. Do you know what? Even if it had have done, that would have been an even worse story.
Well, anyway. So yeah, things have moved on since then, and obviously we've got together, we've worked together, we've helped some businesses in the local region, and not just the local region, around the UK as well. So it's been a good working relationship, I think. We get on just like we all get on with the other members of the HUFF. So it's been a good relationship, and long may it continue. So
absolutely, I couldn't agree more.
So just for the people out there who are not that clued up on invoice finance and property-backed finance, can you go into a bit more detail?
Yeah, absolutely. So we're a little bit different on the invoice finance side. So probably any other invoice discounter out there. Firstly, obviously, we're an independent, so we're not like the banks. We get to make our own decisions. And I guess our other biggest thing is that we're a flexible invoice financier. So it's not just your whole set of invoices, your whole book as it's called, your whole sales ledger. We'll let a customer do a single invoice, a single debtor, just a top couple of debtors, or even one contract, as well as obviously doing the whole book as well. So invoice finance, very, very short and snappy for the people who don't know what it is financed raised against invoices. So if you put an invoice into a customer on day 1 and you have 60-day credit terms, you get paid on day 60. So what we do is we put money out, day 1 or day 2 once the invoice has been raised, and bridge that 60-day cash flow gap. So that you've obviously got the cash to buy more material with, or pay wages with, or whatever the reason is that you need the finance. On the secure business loan side and the property-backed finance, it is using a property or assets. It could be hard assets, like touchable assets, tangible assets, plant and machinery, even cars, to raise cash for a particular reason. That particular reason could be for cash flow. It could be the fact that you need to buy stock to fulfill an order. It could be that you want to buy a property, you're asset rich but cash poor. So you could have a portfolio of properties already, and we would leverage off those properties by taking the security over them and giving you the cash to purchase the next one. And the difference with what we do there is speed. The quickest I've turned the deal around is 4 days, which is fast in that game. Considering, as you know, Rob, a commercial mortgage takes 6 to 9 months. So it allows people to, a quick purchase, quick bit of cash, and part of your job is then to get them out of sort of my bridging finance and into more of a longer term finance. But we're there to get the deal done quickly.
Sure, no, great, thanks for that. So to touch on invoice finance a bit more though, so effectively you would be buying that invoice from the customer, and you would give them X amount against it, somewhere between 70 and 80% of that value of that invoice. So they've got what I would say some skin in the game. So they've sort of got 20% held back. So effectively what happens then, you give them money fairly quickly, they can get on with running their business and use the cash to do whatever they want. And then when they do actually eventually get that money, you get repaid, and they get also the additional 15, 20, 25%, whatever it is as well. Of course, you charge for that, and that's fair enough. But really what it does is it greases the wheels of their business machine, doesn't it?
Absolutely. It gives them more capital, more cash flow. It's cash flow at the end of the day. That's what we're doing. We're giving them the cash flow to be able to then fulfill more orders or more services or buy more stock or do more things with that. So like you say, roughly between 70 to 90%, dependent on the risk. The customer generally, the portion left over is their profit generally, and they're getting the rest of the capital from us that they can then obviously invest in moving things forward, or paying bills or paying suppliers or whatever that might be. Yeah.
And do you specialise in any certain industries?
We do a lot in recruitment. I wouldn't say we specialise in industries, but I've got everything from a gentleman that imports and sells spices, all the way through to a deal that me and you did together, which does labelling, packaging labels, all the way through to service-led industries, so people who are consulting and IT services. So we've got a whole range of people, but we do a lot in recruitment. Recruitment has a very big need for invoice finance because staff need paying weekly, but temporary recruitment, staff need paying weekly, and generally their bills don't get paid, they only get paid monthly. So they can put a timesheet in with their hours on. We can then pay that before the wages need paying, and again, for recruiters to grow, it's a necessary product unless they're exceptionally cash rich,
which is rare. It really is. It really is. Yeah, absolutely. No, great. And so it's interesting because we come across opportunities in that for invoice finance all the time, and I think often when we speak to customers, they don't really know what the product is that they need. They just come to us and say, I've got a cash flow issue. And it's about trying to understand how their business works to be able to place whether that is a cash flow issue that can be solved by Invoice Finance, or it may just be a commercial loan, or it may be a revolving credit facility or some other kind of product. But from my knowledge, I think Invoice Finance is the most prevalent financial product in the UK.
Yeah, I think it's an interesting product, and I think the way the economy is going, it's becoming more interesting as times move on. I think that factoring and invoice finance is to maybe, generation above us, is a dirty word, and it came over from the States, as most of our financial products do come from America. And it was seen as a bit of a lender of last resort, really. And people were seeing it as that because, well, you're leveraging off an invoice to basically then pay that, and it's sort of a dirty product it's seen as. I think as the times have changed, it's starting to lose that stigma. I do find if I deal with people, towards the back end of their careers and business owners, they do want to try and stay away from it. As I think, years have gone on, people have started to get a bit more used to it. And also, I like, working with people like yourselves, Rob, finance brokers and specialists. We base ourselves working with people like you purely simply because you've already done half the job for me, because you've gone and said, actually, you've got a great business. You don't need a cash flow loan, because a cash flow loan, it's not going to grow with you. Once you've spent it, you've spent it. What you need finance that's going to grow with you. So you've already identified that. They've been put into ourselves, and we can go from there. I think what's happening with the economy at the moment with the loan situation, so the BBILS, the CBILS, now the restarts, is that people have used that money because it's cheap. It's very cheap. We all know it's cheap. It's free for a year for starters, and they've paid off their invoice financiers. And I've seen this a lot. And we had a couple. We didn't have a great deal because we're not like most of the invoice financiers out there. And they paid off a line, and they pay off the finance line. And I think what you'll see is invoice finance. I know a lot of my peers, a lot of the people, in the industry, they've seen the inquiry level fall dramatically because everyone's taking a look, because it's cheap and you don't have to administer it. Invoice finance comes with a level of administration. You have to upload your invoices. You have to draw down your cash as you go. And I think what you'll see is come towards, the BBILS and the CBILS are just starting to get repaid. And I think that people are then looking at that thinking, oh, actually, that's not as cheap as I thought it was, or that's where we are. And they haven't got facilities to grow. So I think throughout an economy where, well, it's gone down, but where, people are just trying to stay level, there's very few businesses in the UK going for massive amounts of growth. People have paid off their invoice finance and are managing because that's the cash. I think what we'll see towards the end of the year is people starting to wanting to borrow more and not having the ability. So invoice finance will then start to pick up again. Yeah,
absolutely. Totally agree with that. And in fact, I think it's going to be May/June when people need to start paying back their bounce back loans. I think, the actual CBILS didn't actually roll out. I don't think they started approving anything till probably June-ish time last year. So that'll be a bit further on. But people have got these loans, and I don't blame them at all for getting them. No. We did it ourselves. We got a loan and we parked it. We put it in the bank account. And we did it because we thought, we don't know what's going to happen. We might need this money. Rightly or wrongly, we did that. Maybe we should have actually thought, we won't need this money until we actually need it. So let's not get it. But I think a lot of people just jumped on the bandwagon, as did we. And we went and got them and parked them in a bank account. 12 months on, actually, we weren't hurt that bad. I think we only had a drop of 15% of income in the whole year, which I think is flipping amazing considering. And we actually paid back our loans this week, in fact. So a lot of people are going to be in the same position. So, and it's going to be more advantageous for them to actually pay them off and then look at an alternative cash flow product that's going to help them to grow and flow as they go along, rather than just something which has suddenly got to repay and that money's disappearing straight down the drain. They need something, like you say, that grows with them, because obviously as the turnover grows and the more invoicing they're going to be doing and the more cash flow they need. Simple as that. Yeah,
100%. Yeah.
So it's interesting times ahead, isn't it? It really is. I don't know what's going to happen. I think we're all thinking it's a bit doom and gloom in our industry a bit, and there is some people saying it's come hell or high water, but I think it's going to be somewhere in between. But no one really knows what's going to happen, do they?
No, nobody knows at all, and we did see a massive drop in work. Where I sort of position ourselves at deals from a £50,000 facility to a £500,000 facility, whether that's on property or whether that's on the Invoice Finance. And I think that we saw a massive decrease in borrowing as the existing book with clients, because people couldn't go to work in the first lockdown. We have a lot of independent business owners who they couldn't go to work, therefore the product wasn't selling. On the flip side of that, we've had some customers. We had one customer who used to make carrier bags. He flipped from making carrier bags to making one-use PPE, and it went through the roof. So, but then we have other customers who physically can't go to work. So our income dropped. And then from sort of a new business point of view, it was quiet. It was very quiet last year, and we're only just starting to see it pick up now. The finance brokers have been looking at alternative products like yourself, because CBILS is there for it to be used, a lot of the other products, and it was more beneficial at the time to the client. So we're just starting to see it pick up slightly, quite nicely. It feels like it did pre-COVID. That we're starting to see the inquiries, and people have got a bit more of an appetite for borrowing at the minute. I think because they can see. I think also as well, even if we stayed in this state of COVID in some way, I think what we're seeing at the minute is people going, well, actually, I've got to earn a living. I've got to go to work, because it's not just 3 months situation anymore. So people then start thinking, well, I've got to do it, so therefore I'm going to need cash, and it starts to get some form of normality.
Yeah, absolutely. I think we're going to see business gradually waking up. I don't think it helped that we came out of lockdown-ish, and then went straight into Easter, which pretty much has been 3 weeks here in the UK, isn't it? Because it's been staggered, the children's holidays, and it's just been dead for 3 weeks. It really has. I think I can count on two hands how many phone calls we've had this week. And usually we have 20 or 30 calls a day coming in, plus we're also calling out. So it's really, really quiet. But I think as of next week, we'll see it pick up. Lots more bars and restaurants and stuff are opening back up, aren't they? Some money will start going around the system, people going to the shops a bit more,
And that's it, exactly. It's getting money around the system, pubs, restaurants, takeaways, all those types of things. Even non-essential shops, you don't realise how much they contribute to an economy. Even if it just be, think about the transport industry. If you've got a clothing brand and they're pushing all their clothes to their shops all around the country, but the shops are being closed and there's no work for the transport companies, and it very much has been a bit like that. And I think people have been frightened of making a decision. I think we had good inquiry rates last year, but decisions were horrendous because people don't know what to do. There's no blueprint for this. So they weren't making decisions, and everything and I know that you'll have seen this, everything's took twice as long. And everything, because everyone's wanting to make sure, and there's no, let's do it, let's get on with it. There's been very little of that. And I think, our property side, the bridging finance in lockdowns hasn't been great at all. As we started to come out of lockdowns, it all starts to go again, as it has done now. And, we came out the first lockdown, we had a lovely run into November, and then it went quiet again in the lockdown. And then it's been quiet in this, and we're just coming out the other side, and it's just starting to get busy because investors and people looking at property, whether that be commercial or residential, they all start to make decisions again. And I think, you can go to the pub and you can meet somebody, whether that be for business or personal, and it allows you to make decisions. Where I think in a state of people working from home, people on top of each other, they get stagnant.
Yeah, absolutely. And don't forget, a lot of decisions are actually made in the pub, business decisions, aren't they? And so we will see it pick up, absolutely. But you touched on your property side of the business as well, which I wanted to go in a bit more detail. So obviously bridging loans. So explain a bit to the viewers a bit more about what bridging is and how can it help businesses of all sorts of sizes. Yeah,
so bridging finance, our secure business loans can be used in two or three ways. The bridging loan is a very useful tool for people who are asset rich but cash poor essentially. So they've got plenty of asset in the background that's either commercially mortgaged, personally mortgaged, or owned outright, with plenty of equity in, and then they want to go do something. They see a property up for sale that they want to either buy, renovate, flip, or they find a piece of land that they want to build on, or they find something that's been half finished and they want to complete it, buy it, sell it, or just buy it and add it to the portfolio already. So what we would do is we would place security over the portfolio that's already there, by way of first, second charge, and then we would then lend the business the money. So it's always business lending. So we lend it to the business, and then they can purchase the new property. Or it could be that they've purchased the property or the land and they need the money to build or renovate. So that's what a bridging loan is. It's 12 to 24 months, 24 months absolute max, 3 months being the minimum. So it could just be to get that out. Go from there. It can also be used. It's not just bridging, and it's not just property we take. Hard asset. Some of the big printing machines, some of the big CNC machines in manufacturing. If it's hard asset and it's got value, and they need it for a quick transaction, I think speed is the key with that bridging. Because the end product is, it's not cheap finance, but it's quick finance, and it allows you to get a job done. And that's when you come in again and you can then help somebody, right, okay, so we've made the purchase, we've made it happen. How do we then get Gareth out and get Inksmoor out? And the exit strategy is absolute key on that. And the way that we assess it is 3 simple factors: security, affordability, so can they afford to pay me? And an exit strategy, how are you going to repay me at the end of the term? That's how we look at it. And there's two or three real types of how they can repay me. They can either do an interest only, so I don't expect them to necessarily, it's not like a term loan where you're paying some capital and some interest. They can just, the bridge is exactly that. They pay the interest on the highest value outstanding in the month. It could be that they're buying 2 or 3 properties, renovating them and selling them, and it could be the fact that they're borrowing £500,000, and every time a property sells, they pay a chunk off that, and then just keep the interest going. We can do retained, so if it's, well, I'm going to buy it, I'm going to renovate it, and then I'm going to sell it, but in the middle, I'm not even going to get paid myself. If there's enough equity in that loan, essentially, then we can actually roll the interest up into the loan, so that the interest monthly payments are covered. So at the end, once they sell the property, great, we just get the whole lot repaid and they've not had to pay any interest. Or they can pay the interest off monthly as well, but that would then really be a term loan, and that's not what we do. But we do have some clients who will take maybe an 18-month interest in capital repayment, because maybe they're buying stock and the stock starts to sell, therefore they can afford the interest. So that's that side. We also do the secured business, and that's why I call it secure business loans instead of just bridging, because it has been used in situations where it could be to buy stock rather than to buy property or another asset. It could be that you are buying, you need it to bring the stock in to turn it round to sell it. Trade finance, which I know that obviously you will deal with, is great if you're bringing a finished product in. But if you're bringing in spice powder, for instance,
raw materials,
it's useless. So it could be that they just need to bring it in, do what they've got to do to make it into their product and sell it on. But actually, they only need me really there for 3-4 months. And we just, the security is there, they pay the interest only, and then obviously they remove me once they've sold all the goods. So it can be transactional finance as well, just backed by some sort of security.
Yeah, absolutely. I think that's what's great and flexible about Inksmoor and you guys, is that you can be very transactional, whereas I think traditionally Invoice Finance and other such products are, once you're involved with that finance company, you're hooked in for at least 12 months, maybe longer, and you're paying fees just for having the facility open, and you're not even utilizing it and that kind of stuff. That's not what you're all about at all, is it? You're all about being there when you need them, and then you can move on to a different transaction, different customer. Or if your customer needs you all the time, you'll be there all the time, but they have that flexibility.
Yeah, absolutely. I mean, Invoice Finance starts on a 30-day rolling contract. So, it can be the fact that actually we want to do this contract and then we don't want to give you anything else because actually I get paid on 14 days, but this specifically contract is 60 days, so I need you for that. Great, absolutely perfect. That's what we're there for. And even the bridging, just a minimum of 3 months. So it is, like you say, you move on to the next client, or actually they could dip in and dip out, whenever they're there. And I know that we did a deal together recently, Rob, for a packaging company. And if anybody's been on my LinkedIn, they'll see the details on there. We only do 4 of his customers. We do £250,000 on 4 of his customers, and he was with Lloyds before, and it saved a small fortune because of the flexibility, because he only had to do those, and it saved a lot of admin for him. And it's just those 4 customers, not only are the larger amounts of his ledger, but actually they're the ones with the extended credit terms.
Yeah.
So there's the flexibility again, which actually rewards the client in cash in his own bank.
Yeah, absolutely. And I think for that customer it was a perfect fit because he had a facility, didn't he, before, where he had to put every single invoice through. And now that might work for some companies, and that's absolutely right. And if there is a facility out there that's needed for every single customer, then great, that facility fits for them. But when you've only got a select few that are big transactional customers, you only really want to focus on them. The customers that are paying you on time within 30 days, you don't need to factor them. It'll be a waste of money, a waste of your margin.
Yeah, absolutely. And as the financial landscape, we were already seeing, we were doing, when we started the business, inksmoor Selective Finance is 6 years old, January just gone. We started it just doing single invoices, single debtors, multiple debtors, but that was it. We moved into full book after that. And we were doing probably smaller whole book facilities for probably from years 2 to 4. We were doing a lot of those, a lot of new starts, a lot of that kind of stuff. And I've noticed probably in the last 6 months we've lent larger amounts on more flexible terms, because I think that's what is, it was always missing in the marketplace anyway. But I think that what I'm tending to see is customers that would have never even contemplated invoice finance, wouldn't have even looked at it because I've got to put all my invoices through and blah, blah, blah. They're now looking at contracts going, how do I fund that? Because it's 60 days, it's 75 days, I can't fund it. Therefore, maybe they would have passed that opportunity away. Yeah. Yes, there's a cost for my finance, and yes, it's not necessarily the cheapest in the marketplace, but you can still make a good margin of your own products and your own sales. So, they can take that into consideration and away you go. And we have seen some larger lending on more flexible terms. And I think that's what will happen moving forward, is that we will probably do less of the smaller facilities and more of the larger, but maybe 1 or 2 debtors type facilities.
Yeah, absolutely. And I think also another product that we've seen a lot of recently, which actually is an old product but died a death in the last recession, but suddenly popped up in the last 5 years, is revolving credit facilities. Yeah. Now, and just to give you a bit of background to our viewers on that, revolving credit facilities, like you mentioned earlier, Gareth, started off in America. They actually started off in the late 1800s in department stores, where someone would go in and say, look, I just want to buy stuff on a credit line, and then I'll repay you in a few weeks or whatever it is. And that gave birth to a revolving credit line, which effectively is like an overdraft facility. And we know that then the banks at the moment, the high street banks, don't really want to give you an overdraft. If they do, you'll be maximum probably about 25 grand for an SME. I mean, a larger business can negotiate overdraft facilities. But to be fair, revolving credit facilities are great, I think. And I know that you were possibly kicking around the idea of offering one yourselves. I don't know how you get on with that, but I mean, we've certainly helped customers with it as well, because it's not invoice dependent. In fact, it's not dependent on anything. It's just a lump of cash which you can access, take out what you need, only get charged for what you need when you're using it, and then repay it when you can. And then if you're not using it, you don't get charged. It's as simple as that. And I think it's a great product. We'll see a lot more of that in the coming years, I'm sure.
I think the asset-based lending arena will start to change now. I think I think it's changed over the past 5 years anyway. I think it's probably going to go through its biggest change as a whole. And I think Invoice Finance will probably bear the brunt of that in a way, because it's a fantastic product, but I think that people have to use it correctly. Otherwise, it can be a very costly product for them if it's not used in the correct way. You're right. what started me with the revolving credit idea was purely and simply because our bridging facility, you can repay lump sums, and that then drops what you pay in the month. So, let's say I charge you 1.25% per month on the largest balance outstanding. Then if you repay half of it, then you only pay half the interest. It's really simple. I think what I would like to do when eventually is have the ability for the client to draw back down on that, as opposed to just paying it off, because I think that would then give clients the opportunity to, they want to go again, they want to do a new, they want to buy more stock, or they want to buy another property. Property developers who are either buying dilapidated properties and doing them up and flipping them, or buying bits of land, and they've got cash but maybe not just enough. It gives them that facility to draw down and then pay it back once they've sold it, and then we can go again. So it is, and I think that will, like we said, is the maintenance of the product is virtually limited. There's none for the client. It's just borrowing it and then paying it back. Yeah. So I think it's a cracking product, and as I say, the bridging facility is almost like that, but we're just not repaying it back. Yeah. It's a new deal at that point. So I think when we get there, and I think that facility on its own, I know some of the banks do them, there's plenty of independents doing it, but I think that facility on its own changes the sort of ABL landscape, because you're not looking for invoices to back it against, you're not looking for X, Y and Z, you're not looking for all these covenants that you are. It's just basically, like you say, an overdraft, but they're so hard to come by.
Yeah, they are, absolutely. And I think what you've interestingly touched on a bit there is about security, and security is the big catchword in finance and lending, obviously, but I think often people don't really understand it, and to put that into a succinct way of understanding it, I think risk equals reward from the underwriter's point of view. So where's the risk? So if we take some security, that makes us feel more secure, and of course the reward for them is they're going to charge some interest, they're going to get their money from it. So I think when it comes to invoice finance, the security is the invoice, because effectively the customer that you're invoicing, you're going to do your checks on them and go, right, are they credit worthy? Yes, they are. Great. So you feel more secure in it. If it's property lending, obviously the property or some kind of asset in the background is the security. And if it is actually revolving credit facilities where there's no where there's no invoicing involved, it's right, okay, where do we get the security? Well, security is probably a charge on a property or personal guarantee, something along those lines. So whenever it comes to lending, the lender's initially looking around going, where's the security here? What can I grab to make me feel more comfortable? And then I'll do the lending. And I think, businesses often forget that or don't understand it. And it makes sense when you put it into those ways, isn't it? Because that's how the lenders think.
100%, and I think this is something that both you and I are going to struggle with, and anybody who's in the finance lending money game, shall we say, we're going to struggle with this coming out of sort of the backlash of COVID, really, because in a way, the BBLs, the CBILS, the restarts, all of this, it's kind of spoiled businesses in a way, and that might sound a bit of a harsh thing to say, but people have been used to getting large sums of money with no personal guarantee, with a year's free,
and then cheap after that,
and then they come into the real world and they go, hang on a minute, you want a personal guarantee, you're going to charge me 1% a month, not per annum, and X, Y, and Z, and they look at it and they go, oh my word, that's so expensive. Yeah. And you think, but it's not like, it wasn't. Just get the government out of your head.
Yeah, it's gone, because it was like that before the government got involved, and the government did it because they felt, well, they've got to do something here to generate cash in the system. It's simple as that. And it's a once in a lifetime thing. I don't think we're ever going to see it again. No. And I think we're now battling people's perceptions, and we've already had that as well with customers, saying, well, what's your interest rates on your CBILS before they close down the end of March? And I said, well, the best deal I've seen is about 4% APR, and they've said, well, that's expensive. And I'm like, well, in the real world, that's not expensive, but because the government came in and said you can get rates from 2.5%, it suddenly does look a little bit more expensive. But it was totally unrealistic, and of course, Rishi Sunak, I mean, he's out there to tell the world exactly what they can do, and I understand that, but the devil's always in the detail, and the reality is even the high street lenders were lending at 4 or 5%. So we have done CBILS loans right up to 15% APR, but it's all risk judged, and if the customer's not got the best business at the moment and it's a bit risky for the lender, then they're going to charge a higher rate. But I think those loans are gone now. The recovery loan schemes come out. I don't know anyone in my industry yet who's even completed one. I know for a fact there's only 19 lenders on the panel compared to where it was 115 lenders on the CBILS. I'm sure we'll see more lenders come out on that. I'm sure we'll see what happens of it, but it doesn't have the 12-month interest-free period. It doesn't have that low interest rate. In fact, all it has is an 80% backing from the government, which is still good from the lender's point of view. They think, oh great, actually, you know what, I'd rather have the government's guarantee than maybe your guarantee, because it's going to be stronger than you. No offense, Mr. Customer or Mrs. Customer. So we'll wait and see what happens, but I don't think there's going to be a clamoring of the recovery loan scheme. Do you?
No, I don't. And it's interesting you mentioned about security there, Rob, and everything else. I think the other thing that sometimes put customers off is due diligence. Lenders like to do the due diligence, and we like to know we're going to get repaid, which is always a bonus. And I think that the way the government has lent the B-bills more than the C-bills. I think that there's definitely been due diligence involved in most of that, which is why I think we've lent, is it 75 billion out, and I think only like a very, very small portion of it is actually CBILS, because most of the companies weren't sophisticated enough to even get the due diligence completed. And I think that the way that people had their £50,000 bounce back, it was a four box couple of questions, a tick and a submit, and the next thing you knew, tomorrow morning there's 50 grand in your bank account. It sends the wrong message out to people who want to borrow money, and it gives them so I think getting back into that and getting people used to, right, I need to see 3 months bank statements, I need to see your last accounts, and really, why do you want to see that? Well, because that's what lending is. We need to do some due diligence. But you move on to the restarts. I mean, I think that's basically the old EFGs. Why would I think they're a good product. I think they're there to help business. Obviously they're very pro business. But like you say, I don't know anybody in the industry who's completed one or even really contemplating doing it sort of from an independence level either.
No, I don't think so. I mean, well, we'll soon find out. I mean, I think a lot of the asset-backed lenders will want to get involved in it, because effectively, if they can get an asset and they can get a guarantee from the government, then from their point of view, they're absolutely secure up to the eyeballs. And, it's great from their point of view. So we do know there's a few lenders kicking around the application and waiting for their response. So we'll wait and see what happens there. But once again, we'll see what happens. Customers come to us saying, I need some funds. And when you drill down onto it and ask them what they need it for, it might be a bit of asset. It might be, I need some cash flow to do some training for my employees. I might need to do some marketing. And it's because I've got a cash flow issue because I've got held up on my invoices. So from my point of view, you suddenly got 3 or 4 products there that we need to help the customer with, not just give them a lump sum of cash. We need to give them the right product for the right reason, the right fit.
And I think that Rob, I think that's a good sort of way of trying to get it over to the viewers and the people who are listening, is the fact that it's okay you applying online for a loan with a lender, with whoever it is that you're taking. I think what to get over to sort of businesses that maybe haven't gone through this process before and borrowed money, and but they've hitting a patch of growth, or maybe they're going through a bit of a tough time and they could do with a little bit of injective capital to help them, is use a finance broker, because you think you need 50 grand and it'll sort all your problems. Actually, you don't necessarily need that. You need maybe a bit of asset finance, which can be relatively cheap, because you're buying new good quality asset, whether that be stock, plant and machinery, whether that be whatever that might be, and you can get maybe some cheaper rates on that than a cash flow loan, or a bridging loan, or but maybe there is 4 or 5 products that you can actually use rather than just a lump sum of cash, and that's where going to somebody like yourself, I work with people like Rob day in, day out, and that really does benefit the customer, because they can see that actually I'd have just gone and got a lump sum, but doing it this way, not only that, it gives you scope for further growth as well.
Yeah, definitely, absolutely spot on with that. I think we're not here to beat people up and tell them, and trying to protect our industry and say, look, this is, we should be charging higher rates and that kind of stuff. And it might have come across that way earlier, but actually what I'm trying to do is give you an insight into how the lenders think. And what's good about that is actually you can flip that against them. So for instance, if you need some money and you want to use that to buy some asset, well, get asset finance, because if you go and get a loan, the chances are that you're going to have to put your personal guarantee or something up against it to secure it. Well, if you go and get an asset-backed agreement, the asset's a security. So therefore, you're playing the lender's game. They want risk and reward. Okay, so what's your risk and reward? Well, I'm going to risk you taking, the asset as security, and the reward is I'm going to use that asset to generate income in my business, and I'm going to get some income from it. So it's all about customers, SMEs, using that risk and reward, rule to help them generate money in their business. As simple as that.
Yeah, absolutely.
So no, I think we've talked a lot about the finance world, and that's what we're here to do. But Gareth, I know you quite well, and I like to think I know a bit about your background. But I actually saw some surprises on your LinkedIn the other day. And did you used to work for is it DFS, DHS? Can't remember what it was now. MFI, that was the one. Yeah. Is it your first sales job?
First sales job, mate. That's what got me into sales. Yeah, one of the lads at Hollensians Rugby Club, he gave me a job there. Started off selling sofas, and then went to the dizzy heights of selling bathrooms while I was at university. So that's what. If you can sell a sofa, anything else is relatively easy after that.
Well, about all that. What is it? 0% finance for 3 years on a sofa, yeah.
Bit of black horse, mate. Loads used to do those and get all the bonus bonds.
Yeah, those days are gone, aren't they? Bonus bonds.
Yeah, I know.
So, but you mentioned Hollensians, so you're into rugby, aren't you?
Yeah. I'm the treasurer down there, and I've been down there for 20 years, something like that now.
Really? Wow.
Yeah.
You play for them as well?
Yeah. I haven't been playing. Nobody's been playing recently, but played for them, and I love it down there. They're a good group of guys, and I think there's one of everybody from every walk of life down there. It's lovely. Yeah. Good family club.
Did you ever get to have a sniff around the first team, or was you second and third?
No, I had a good sniff around the first team for a little period of time, but then you know what it's like, matey, with this industry. There's plenty of socialising to do. So, and that's usually on a Thursday when training is. So I was very happy knocking around the second team with some of those guys. So yeah.
Do you think that's part of your Welsh blood that's got the rugby in you?
Oh, 100%, matey. I mean, I started playing football as a kid, and I think my dad was like, "We're gonna have to knock this out of him." And and as soon as he could get me into football, into rugby, he did. And yeah, I thank him for that, because part of probably the development as a person has come from being down that rugby club. Learning to sit there and speak to people and enjoy yourself, and it comes from that type of environment massively. As well as obviously working in places like MFI and stuff like that. But yeah, the rugby's a big influence on my life.
Yeah. It's interesting, isn't it? Because it's like, what would you say you are as a person? An introvert or an extrovert?
Oof, probably an extrovert.
Yeah, and I'd probably agree with that. And you might be surprised that I would consider myself an introvert, and I certainly was as a younger kid. And I was forever sat on my own drawing or doing something totally me, and my dad said to me at the time, he said, you'd be good at sales because you have got a little bit of gift of the gab. But I said I was entirely shy. And so I actually sort of put myself into those awkward positions of sales jobs and that kind of stuff to learn on the job, and I think what you've just touched on about being social and speaking to people and that kind of stuff, you're learning on the job and you understand people a bit better. And then it's as simple as us understanding businesses. If you can get on with someone and socialise with them and have a normal conversation with them and ask normal questions without feeling like they're being probed, or sometimes like the bank managers do. But if you're just having a normal conversation, and as you as a business owner, as me as a business owner, we can have those on the level conversations with other business owners. It actually becomes a good relationship just from that point of view, doesn't it?
Yeah, it does massively, and I think knowing you like I do, I would probably say that I can understand the introvert comment, even though you definitely don't come across that from just meeting you. But I do, knowing you the way I do, I can get that. I think also, there's two different types of salespeople, really, isn't there? And business owners. You've got the people who talk when they're spoken to and are thinkers and assess everything, maybe even overthink everything. And then you have the people who just get on with anybody and anything and shoot from the hip and I'm probably a little bit more like the latter than anything else. But it doesn't stop you being a good salesperson just because you can't. I've had this conversation with one of the young guys who works with me, and Jamie is a lovely guy, and the one thing that me and you do, which not everybody does, and it's not a bad thing, but is chat shit, basically. Because exactly what we're doing now. Because if you can do that, it makes the business much easier. Because the relationship, the rapport, you feel comfortable, you open up, and before you know it, the sale's closed. You found something in common, and the sale's done. You've not even spoke about business, and I think that comes from just an ability to. Yeah, exactly.
Yeah. It's interesting because you see a lot of things on social media. You know that I'm a right social media queen, and
you love it, man.
And you see a lot of the sales coaches out there, and I've got a lot of time for sales coaches. Hence, from my background. But it's interesting. There's one guy, I won't name him on here. You know who he is. You know who he is, and he often talks about people don't buy from people, and I think that's totally wrong. I think people do buy from people. As simple as that. As long as that person's obviously got a good product. I mean, you might like the guy, but if they've got a product you don't need, you're not going to buy from them. You're not going to buy just because you feel sorry for them.
Yeah.
But the fact is, you do buy from people. It's as simple as that, isn't it?
Rob, I 100% agree with you, and I think it takes us back into sort of the COVID scenario. I found COVID exceptionally hard because sitting across from somebody, the buy-in signals and stuff you don't realise that you even do. Yeah. It's impossible, and meetings are shorter. The rapport is less because generally meetings an hour. Some of these Zoom meetings are 15 minutes because it's very much you try and have a bit of a conversation. It's business and it's done because there is no personal touch almost, and telephone calls are even worse. And I think as soon as we can get out there and mix properly, and on the flip side, it's been good in other ways because it's there's a lot less wasting time. So a potential customer may say, "Can you come and see me?" Well, that's a 3-hour drive away. Of course I will. You go and see them, and actually it turns out they're just kicking the tires and they're not really that interested. And actually an initial Zoom would have sniffed that one out and you would have not wasted all that time. But I think in general, day to day, I think there'll be a hybrid moving forward, but part of me thinks that everything will be forgotten that we've just learned, and we'll all go back to doing what we were doing because that's what people enjoy. Yeah, people do enjoy social interaction. I totally agree with that. I'm hoping that we do get rid of those long journeys, like wasted journeys. Not even the ones that are wasted. I mean, I've got customers all over the UK, and there's one right down in the depths of Bristol, and as much as I like him, his business, and we do a lot of business, for me to drive down there for a 1-hour meeting and drive back is actually an 8-hour day for a 1-hour meeting, and it's just pointless. It's just absolutely pointless, unless you can obviously mix up and see other people down there. But the chances are trying to get a meeting with someone else locally within a drop of a hat is nigh on impossible. Yeah, absolutely. So I hope we do more of these sort of online meetings to get underneath people's skin. Then we go and see them face to face. Absolutely. And I think that's just process and technology, getting used to changing your process. I know we went, in the first lockdown, that nobody knew what to do. Nobody knew what they were doing, and I think it was very much, well, it'll be 3 months, we'll hang on to it, it'll have gone and we'll go back to normal. And then 3 months is there and you're thinking, damn, we're going to have to really think about this. And I know just from a personal perspective, you're thinking, well, actually, I'm going to have to, you go to networking events or you go to events in our industry week in, week out. They're stopped. Actually, I haven't, and I was thinking the other day just about some of the introducers that I haven't maybe seen them for a year, maybe not even talked to some, maybe that I don't do business with but are on the periphery of our industry. And you think, flipping heck, I've not spoken to, I've not made the effort. And sometimes it's now impossible to do that because you don't get any business from them, so you don't call them, but you might see them and might go, oh, what about this, or what about that? Yeah. And that's the bit that I've missed is the amount of people that maybe actually I don't do any work with, and maybe I'll never do any work with because they're not really, they're never going to have that opportunity, but they have an impact on what you do and the way you do stuff. And I think, and that's the problem with this. And trying to socialise through Teams or Zoom or whatever else is now impossible when only one of you can speak at once.
Yeah, exactly. And that's the purpose of HUFF, isn't it? Fundamentally, we're all business owners in there from our various different backgrounds coming together to help the SME community of the Hull and Humber. And every sort of month or 2 months, we get together at the Active Plus Sports Centre, which is hosted by Kaiser Consulting, who own and work from there. They're accountants and grant specialists, and we get together in there. We have an informal meeting, and then we go to the bar and have a few beers, and we just chinwag about everything. And then ideas flow, and people go, oh, actually, I hadn't thought about that. And we invite some of our customers along. If anyone wants to come along, they're more than welcome. I think the next one's on the 28th of May at 3 p.m. in the Active Sports Sports Centre, which I can't remember which road it is, but it's in Hull. And you're more than welcome to come down. We'll have a couple of hours of a chat and a couple of beers. I'll buy anyone a beer. And we'll just talk about business on a normal level and see if we can all help each other out.
I think that's exactly it, Rob. And I think it's the fact that there's a big reach in there. You've got everything from an accountant to financial advisors to brokers and even insolvency professionals. So there's a bit of everything in there. I think it just gives us all an opportunity. Part of owning a business, or part of even being in business, or even being in industry, is actually just learning. Learning from each other, and whether it even be a mistake or I've done this, what would you have done? And it's a good group for that. And we all do a little bit of business as well, which is aim of the game.
Absolutely, that's the main purpose, isn't it? Simple as that.
Yeah, absolutely.
So we're coming towards the end of our hour, and towards the end we like to do a few quick fire questions. So I'm going to give you maybe roughly 10 questions, and see if you can be as quick as possible. But you can expand on them. I'm sure some of them might be funny or some might be serious. So let's I'll crack up with these. So, which is the most sought after finance facility at the moment, do you think?
Bridging. We're seeing it coming out of this side of lockdown and COVID. We're seeing some big properties, people expanding or people looking to buy a property. So we're seeing quite a lot of that bridging finance at the minute.
Right. Okay. Night out or night in?
Night out. Desperate for one, Rob. Desperate for one.
Stupid question, really, isn't it?
Oh, mate, my kitchen has seen so many beers being drunk in it this past year that I'm just desperate to get into a bar.
Well, I can't wait till, what is it? Is it the 17th of May when they actually open the bars properly-ish? Yeah. That's when I'm going to go. I'm going to wait until then. I don't want to sit in a freezing cold beer garden.
I'm with you on that, matey. I've not done that yet either. I mean, I said to one of the lads in the office, for Neck, pub's been up 5 days and I've not been yet.
Well, this is why I built the pub.
I know. You took it one extra level though, didn't you?
Oh, I had to. There we go. Cheers.
Cheers.
So, which industries do you think are seeking finance the most at the moment?
It's a good question, that. I think there's a fair bit in recruitment at the minute because I think the ones that they're now having to re-ramp themselves back up. I think the ones that still managed to keep going were okay. I think there's now people, especially the ones who have maybe used a bounce back and it's been used, see quite a bit in that. Also, as you'll see, I think the property market, whether that be developers, whether that be people, because they've been quite dormant. There's not been massive amounts of new build, even though construction still be allowed. It's the people on that periphery. So I think the recruitment, certainly on the Invoice Finance side, and definitely any sort of funding around sort of development finance, property finance, or even people buying buy-to-lets is starting to really ramp up, because the last year's affected them probably the most.
Yeah, definitely. I mean, you've seen a lot going on in the construction industry, and it's interesting is because last recession, the first thing to get hit is the construction industry, and it just went bang, the bubble burst a whole lot. And I think everyone suspected it will happen again. It hasn't. If anything, it's boomed. So it's a little bit bizarre. I don't think anyone can really quite get their finger on why, but it's interesting, isn't it?
I think the fact that the government, what do we do? We build a way out of a recession, spend it on infrastructure and everything, and even in the first lockdown, I mean, even on our business park, they built a full new block of offices in the middle of the first lockdown because they were allowed to. I think that they've done that to make, because if the construction industry goes, then it affects everything. So I think what they've tried to do is keep that industry going throughout, and then spend more to keep it going. So yeah, it's a busy old industry, that.
It is. No, I agree. The north or the south?
Come on, Rob. Come on, how many chats have we sat in the pub?
You're going to say the south, aren't you?
No, mate. Up north.
Up north. Well, I live up north now. I have done for...
Mate, because you saw that it was a much better place to come and live. That was simple as that, wasn't it?
To be fair, you're absolutely right. And I've said it many a time, I would never move back down south. I'm very, very comfortable here. I've got a great life. The people are great, and I wouldn't change it for the world. I've been here 8 years now. So I think, I would maybe err on the side of the north. But
apart from that first phone call, mate, I won't even send you back either. I won't even send you back. I'll let you know. Another couple of years, I might even let you have an honorary badge.
Thanks, mate. I'll wait for that moment. That'll be a proud day.
Well.
Veggie or meat eater?
Oh, meat eater, mate. I couldn't think of anything worse than being a veggie.
You're not one of these jumping on the. I'm going to get myself in trouble here, and I say jumping on the bandwagon of veganism.
No, mate. No, not at all, mate. It's just not for me. Just not for me. A good night out didn't start with a salad, did it, Rob?
You're not wrong. I must admit, though, we have been trying to make an effort of having 2 or 3 veggie meals a week, and we had one last night, for instance. So, and I must admit, when I saw the reports about how many animals that we were just killing and the meat we're chucking away, I thought that's a little bit harsh. I'm not ever going to be a vegan. I'm not ever going to be a vegetarian, and I'm not massively into the fact that I'm not against animals being killed for meat. I think there's nothing better than a burger and a steak, if you ask me. So,
I agree. Do you know what? Two or 3 years ago, I did 2 weeks vegan. Right, yeah. 2 weeks. Didn't even drink any beer, which is obviously phenomenally unusual for me, and I never felt better. Honestly, never felt better. But it's like drinking, isn't it? I'm not going to give up Guinness, so I'm not going to give up steak either. So I'd rather bumble through life with a hangover and drink Guinness and have a steak than I would feeling great, not eating meat.
Yeah. But to be fair, though, I think we could all do with eating less meat. Absolutely.
Agreed.
Just
Agreed. Balanced diet, mate. Balanced diet.
Yeah, absolutely. And we need less methane in this world. We don't need all these cows going around stinking out the world. So football, rugby. I know the answer to this.
Rugby, mate. All day long.
You're not a football man at all, are you?
No, not even. No, not in the.
You don't have a team, do you?
I don't even have a team, mate. No. I've got a whole. Strangely enough, I've got a whole City shirt on my office wall, a signed one which was given to me by somebody. But it's not for me, mate.
Fair enough, mate. Chick flick or horror?
Do you know, that's a really tough one because I wouldn't watch either. So I would go with chick flick probably because I'm not into sitting on the sofa crapping myself.
Unless you had an awful lot of beer and you don't know where you are. Yeah, well, I must admit, mate, I'm not into either chick flicks or horror, and Mrs. absolutely loves a chick flick, so as soon as that goes on, I have to leave the room. Yeah. It's not for me.
No, not for me either, mate.
Then I did see, is it 50 First Dates? I saw that the other day. Have you ever seen it? That's actually a good one. It's Adam Sandler and I can't remember the girl's name, the actress. She was the child star. Now, I can't remember her name. She had a drug problem years ago. What kind of
Oh, Miley Cyrus?
No, the other one. Anyway, I can't remember. But that actually is a chick flick.
So many of them.
Yeah, there is. Yeah, that was a chick flick, and a comedy. And I watched it again, and I think it's like 15 years old. Absolutely hilarious. You got to watch it.
I'll give that one a go, man.
Maybe when you're on a date, mate, or something. Date night. Right, last question, mate. What do you have in your chips?
Chip spice, Rob. I'm from Hull.
It's funny. I wrote down there, and the correct answer is chip spice. And
did you? I'd not seen that, Rob. I'd not seen that. And I tell you what, people who put gravy on chips want sorting out. That's not right. So if when you're doing these and somebody says gravy, you need to refer them to me, because gravy on chips is just not right.
Mate,
curry sauce, I'll let you have that, but not
hold on. Yeah, curry sauce, definitely. But hold on, right? You're a northerner, and I think every northerner would be up in arms with that statement, wouldn't they?
They will be, but it just don't work.
But I've had like pie and chips, and you've had a bit of gravy with the pie.
That's fine, because you've got the pie. You've got the pie. That's fine. It's not gravy on chips, Rob. Can't do it.
Just the gravy, mate. I know. No, I'm a curry man, or just good old fashioned salt and vinegar, mate.
Oh, salt and vinegar, bit of brown sauce. Away you go.
Happy days.
But obviously, the right answer is chip spice, Rob.
Yeah. I do like a bit of mayonnaise actually, and then that's a bit French.
One of our other group members, Fraser, if you ever have him round for a barbecue or something, you have to get a new box of flipping mayonnaise, and he eats so much of it with it. It's ridiculous.
Well, he has got a strange surname. Maybe he's from that neck of the woods.
It might be.
Yeah, we never know. Anyway, Gareth, thank you very much for today. Really appreciate your time and interesting points you made today about the world that you operate in, and hopefully it was helpful to our listeners and viewers. And like I said earlier, our next HHuFF meeting is at the Active Plus Sports Centre in Hull on the 28th of May at 3 p.m. You're welcome. Come down, we'll buy you a beer, we'll have a talk about business, and if we can help you, we can. If we can't, you've made a new contact, and it's as simple as that. So, Gareth, thank you very much for your time. Appreciate it, and we'll speak again soon. You take care.
Rob, thanks for having me, mate. Cheers, buddy.
All the best. Cheers.